Hey guys, thanks for watching this video. We're here one more time to talk about a few things in the mortgage industry. My name is Felipe Guimarães. This is Lucas Silva. Thank you, brother. We're going to talk about a few things here, quickly go over what closing costs are. If you're a first-time buyer out there, keep in mind, it's not just the down payment you're spending, you also have closing costs. Our main focus here in this video today is just to explain to you item by item what closing costs are, so that way when you're buying a home or refinancing, you understand how to read the closing costs. So I'll start with Lucas here on letter A. He's going to give you a quick explanation what is being charged in section A.
Yeah, so letter A is very simple. There's not a lot of items on it, as you can clearly see. And this is one of the few things that we can actually have some level of control over in the closing costs. And that being this first item right here, which is the percentage of the loan amount that's paid in points. And what are points? Points are what you pay at closing if you wish to be able to lower your interest rate. And this client right here paid 0.634% of the loan amount to get points to buy down his rate to 6.875, I believe. Correct.
Yep.
And that was that charge right there. And then the second one is the underwriting fee. Every bank's going to charge an underwriting fee. I mean, it's going to depend how much it is going to depend on the bank, but every loan you do, you're going to have to pay for this fee for them to be able to process your loan.
Excellent. That gives us the flexibility, guys. Like if you want to buy down a rate, if you want to meet a monthly payment budget you have, or even if you want to get credit for your loan, you want a higher rate, you can do that. So we do have that flexibility with our lenders. Lucas, what's part B or section B?
Yeah, these are all just services that you, obviously, as it says, that services that you can't shop for. And it's things like appraisal fees, which you have to pay as soon as you get an offer accepted on a house. You have to go and have the appraiser go and, you know, do an appraisal on the house, see how much it's going to be worth. If it's actually going to be worth as much as they're saying it is. You know, you have your credit report fee, which you have to pay, obviously, for when we pull your credit. You know, and then some other fees like your flood certification, your tax service,
Yep.
electronic registration, things like that.
Yeah, the electronic MERS, by the way, I remember what that was. That's like a kind of a research that the underwriters do just to, like, you know, see the background of the client, see if he owns any other properties or anything that has to do with legal department. So the MERS is like a big search that underwriters do just to make sure the client doesn't have any liabilities and other properties that we're not disclosing.
Right.
So tell us a little bit about letter C. I know it has to do with a lot of the title and attorneys.
Yeah, letter C is just a lot of like fees that, you know, you're gonna have to pay with the attorney and the title company because they're gonna be the ones that are gonna be,
right,
you know, kind of administering the closing, right?
Yeah, their main job is to do the closing and make sure all the fees are correct. Mm-hmm. So they got their fee in there, and you get the title insurance too, which is the premium. You can see it written there, premium lender coverage. Right. Yeah, the lender wants to cover themselves with lender insurance, so title insurance. So it's important. All those fees you're looking at, they can vary a little bit depending on what title company we use.
All right, now what about letter E? What's going on here?
Yeah, so letter E, recording fees, basically goes for the register of deeds of that town. So that's just make sure your house gets recorded, you're on title and all, that gets officialized. So you do have the town charging that fee, or the register of deeds in this case. Transfer taxes, in this case here, our buyer's paying a transfer tax because he's buying a property in Florida. So it means, like, you know, whatever taxes the buyer needs to cover, it's transferred to his responsibility to pay. Sometimes the seller will pay 50% of this or maybe 25%, but if you're buying in Florida, you're obligated to pay this. In Massachusetts, the seller always pays a transfer tax, but you'll see that if you're buying in Florida, you'll see that on the HUD and closing disclosure. Lucas, how about letter F? I know it's a lot of it is reserves, part of the escrow account, but tell us a little bit about what the fees are for.
Yeah, so the first item here is the homeowner's insurance premium, and obviously you pay the first 12 months at closing, but why exactly is it?
So basically right there, they just want to make sure you have 1 year paid insurance, right? Bank is protecting themselves, make sure the house does not, you know, run out of insurance policy. Obviously, if anything happens to the house, it's covered by insurance. But the question people always have is, why do I pay it monthly and why do I have to pay at closing? Like, why do I pay a full premium at closing and then I still have a monthly bill? The reason they do that is because right now, when you're buying a house or refinancing, you have 1 year cleared with the lender. So if they want to refinance in the anniversary date of that purchase or a refi next year, for example, they can use those funds. You're building up new funds by paying monthly to create another reserve. So that's why they do that. Again, it's part of the escrow accounts. Lucas, what is this 4-day prepaid interest at $42 that the borrower is getting charged?
Yeah, so this prepaid interest here is because the borrower is closing on the 26th of the month. And let's say the month, you know, in question has 30 days. Yep. You're gonna have to pay the interest charge for the next 4 days for the rest of the month.
Question for you. What if they close on the 20th?
If they close on the 20th, you'd have to pay 10 days.
So it'd be 10 days. Well, what's the advantage in that? So let's say we're closing in June. We don't pay July, right? So what would be my next first payment, or would be my first payment?
Your first payment will be 45 days after the closing.
Perfect. So that'll land basically in August, right? So
Yeah.
awesome. So the prepaid is like you're paying for that extra date of the month. Didn't finish up. What if you close on the 28th?
And you'll have only 2
2
days.
days. So that's important to pay attention to depending on the date you close. All right, we did talk about escrows, and again, letter G has to do with that. Homeowners insurance, mortgage insurance if you're doing FHA, it's not this case here. Property taxes, again, you're getting reserves. All the stuff that we look at the right column here, guys, most of it's going to, not all of it, but most of it's going to be reserves that's going to go into your escrow account. Letter H, owner's title, that's optional, as you can see. I super recommend all my clients to get it because you never know if something's wrong with the title of the house, and you never know, somebody shows up at your house 10 years later and say, hey, I did this roof and the guy never paid me. That title insurance is there to cover you for any of those kind of things. Using an example here for this case. That wraps it up with closing costs. Our intention here is just to make sure you understand item by item. And again, what Lucas said, we only really have control of letter A. All other fees are just third-party fees that we kind of estimate right now at the beginning of the loan process. And then again, it will land back on title or the title company to make sure all those fees are corrected before our client closes. And remember, your appraisal fee should be the only fee you pay up front before you close on a home, because you do need to get the home appraised. That's an important thing right there. It doesn't mean you're paying on contract whatever X amount of dollars, doesn't mean the house is worth that. The appraisal serves to protect you in this deal. So until our next video, I hope this one really cleared up a few things there, and I hope you understand what closing costs are.